Throughout this series, we've talked about preparation, safety, and what to do during and after disasters. But there is one important question many policyholders eventually ask. Is my insurer financially strong enough to pay claims when catastrophe strikes? Because insurance is a promise, and a promise is only as strong as the company standing behind it. As an insurer with 62 years of protection, our responsibility is not only to issue policies, but to ensure we are financially prepared to honor them, especially during severe or unexpected events. After all, catastrophes test insurers, and financial strength determines who stands firm. So let's talk about one important indicator of financial strength: the Capital Adequacy Ratio, or CAR. CAR measures an insurer's ability to pay claims, even during extreme or large-scale loss events. Regulators require insurance companies to maintain a minimum CAR of 100%. At Perla Insurance, our CAR stands at 979%, nearly 10 times higher than the regulatory requirement. And that is what truly sets Perla apart. Now you may ask, what does a 979% CAR actually mean for you as a policyholder? Simply put, it means strength and stability. It means we are financially prepared for large catastrophe claims. It means we remain stable even during challenging economic conditions. And most importantly, it means your policy is backed by real, measurable financial capacity. This becomes even more important during disasters. When widespread flooding occurs, claim volumes increase, payout amounts rise, and operational pressure intensifies. In times like these, insurers must rely on strong reserves, responsible underwriting, disciplined claims management, and solid regulatory compliance. A high capital adequacy ratio proves that we are built not just for ordinary days, but for crisis periods as well. Another sign of stability is longevity. Operating for over 62 years means we have experienced multiple catastrophe cycles, navigated economic changes, strengthened our internal systems, and continued earning the trust of our clients. Financial strength is not built overnight. It is the result of responsible management over time. And of course, financial stability is not simply self-declared. As a regulated insurer under the Insurance Commission, our capital adequacy is strictly monitored. Our 979% CAR reflects disciplined governance beyond the minimum requirement. Preparedness is policy-backed, stability is audited, and strength is measurable. Now, during disasters, many policyholders ask a simple but important question: will my insurer be able to pay? At Perla Insurance, we believe trust is built through transparency. That is why we don't rely on words alone. I guess we show numbers. 62 years of protection, 979% capital adequacy ratio. Because when catastrophes happen, your coverage should be backed by strength you can measure. If you'd like to learn more about your protection or review your coverage, message us anytime. And for more catastrophe readiness guidance every Friday, follow our page and stay informed.
All is well.